Good morning, everybody. Welcome to the Silo Wealth Management video blog. Today is Thursday, January 7th, and since my last blog, the markets have continued its onslaught to the downside. Here's what's happening. The Chinese markets, the last two sessions, down 7%. They've had to, they have circuit breakers set in place like most markets do. We have them as well. That at 7%, the markets were shut down. Last night they shut down. It was supposed to be 15 minutes. They shut it down for the rest of the session. Okay. I think that brings on a little bit more panic. You have all the markets overseas were down, but I just want to explain to you that it doesn't feel bear market-ish. It doesn't. It feels more like correction 1998, which was the Asian contagion, where the problems in the Asian countries, of course, like I said on Tuesday, they sneeze, we could catch the cold. So I think this is a relatively short-term blip, and I believe by the end of the year we'll be higher than we are today. I think that we are going to do that. And one thing I look at, a couple of things, is that let's talk about dividend yields. Dividend yields are the dividends that stocks pay, and it used to be in the old days when the stock market first opened in the 1800s, stocks were bought for dividends. There wasn't a lot of growth. If you paid $20 for a stock, they're going to pay you part of their profits in dividends. And you know what? If the stock went to $21, you were happy because you got a 2 or 3% dividend. So dividends are very important in this market. It adds to your total return. And what total return is, the appreciation of the stock plus the dividend is your total return. What's interesting is that dividend yield, the dividend yield on the S&P 500, the 500 largest stocks, the main index that most people should use, but we don't. We always talk the Dow because that's the one that's most publicized, but the S&P 500 stocks, the dividend yield is about 2.2%, meaning if you're to buy the S&P 500, you're going to get 2.2% on your money while you wait. So you put $1,000 in the S&P 500, you're going to get a lot better than a money market or a savings account. You're getting 2.2% on your money, okay? The 10-year Treasury is now yielding about 2.1%. So that's very interesting because you're getting a better yield out of the stock market than you are the bond market. What that tells me is stocks are approaching an oversold territory. Now, by all indications, technical indications, meaning looking at the charts, looking at the oscillators, stocks are oversold territory. But we could stay oversold for a little while, and certainly we're going to get more oversold today. Okay, we're indicating down over 300 in the Dow. So what happens to dividend yields when stocks go down? Because, give you an example, a $10 stock pays out a dividend of $1. I'm keeping it simple. That is a 10% dividend yield, right? Okay. So if that stock drops to $5, they still pay that $1 in dividends to their shareholders. That makes the yield 20%. So what has happened is the S&P 500 has dropped enough to where now that dividend yield of 2.2% is higher than what a 10-year Treasury, which is supposed to be absolute no risk if you hold it 10 years. It's very interesting. That doesn't usually happen. And when it does happen, it's usually an indication that stocks are near a low. So I believe they are near a low. I think that certainly if you are going to go out and look for opportunity today, you got to look for the value opportunities. Look for stocks that either A, have held up very well in this, okay, or B, that have great valuations as a percentage of the stock market. So let's say, for example, using that S&P 500, we have a PE of 2016 earnings of about 15.5 plus or minus a fraction, okay? So if you find a stock that trades at 10 times 2016 earnings or a multiple or PE of 10 in 2016 earnings, that's pretty strong. That's a 33% haircut or a discount of what the S&P 500 is. So those could be opportunities. You know, I still love the financials, okay? And financials tend to pay pretty good dividends as well. So, long term is what you need to be thinking. Not many of you out there that are listening to this blog are short-term traders. Most people are not short-term traders. Short-term traders lose money. You have to be long-term. Over the long term and the long haul, the stock market has been a great investment. but you have these blips, things that you can't control. The good news is the Federal Reserve, and throughout all this, because you have Saudi Arabia fighting with Iran, you have the Syrian situation, you have Putin riding shirtless on bareback on horses. You have, that's kind of a joke. You have all the Chinese situation. You have all the Asian contagion and all that, or the Asian flu, or whatever you want to call it. The Fed raised rates in the midst of all this. I think what that tells us is that at the next month's meeting, a rate hike's off the table. That's not going to happen. And I think it's going to be gradual, and I think they've given us indications that will be gradual. And it's more likely now, I believe, after what I'm seeing, that the 4 rate hikes that people are talking about this year, I think it probably cuts it down to 3, maybe even 2 rate hikes. You can't raise rates. That is the Fed's tool to slow down an overheating economy. First of all, I don't see where the overheating is, but I don't mind the rate hike. That was okay. But you can't keep raising rates in the midst of something like this. So I think that puts short-term rate hikes off the table. We'll see. You never know what the Fed's thinking, but certainly this is a world economy. All right. I think that what I want to see today, I want to see the stock market sell off early, rebound later in the day. That would give me an indication. I mean, we're not seeing panic selling. Didn't see that yesterday. I think I mentioned that earlier. No panic selling out there, really. It was just lack of buyers. People are just not sure what to do with the money. So look for opportunities. I will come up with a list, and there's some things I like out there a lot that are trading at fantastic valuations that are businesses and people I want to be in business with, and that's what I'm looking at when I'm buying stocks. Anyway, if you have any questions, get a hold of me. Our newsletter is out. Very interesting. Also, I'm going to send out 16 financial New Year's resolutions will be going out via email. If you want to sign up for our email list, just go to my website, stockdr.com. It's also silentwealth.com. 2 names, 1 location, and you will get the emails straight to your inbox. If you want to call the office, we'll get it to you. We'll find a way to do it. All right. I appreciate everybody sharing this video, and I appreciate everybody listening to this video. And if you have any questions, problems, issues, feel free to contact me. I'm Lee Seiler, and let's have a great day.